Hey everyone, so we're back again. As usual, we'll start with the dollar index. Let me get my charts up quickly here. So, briefly rose to 108.29 before the Fed announced this policy. They do want to keep things generally between 4.25 and 4.5%, is what it's sounding like from what Powell has said. Look, general market sentiment. Everyone is looking into what Trump's tariffs will mean on again Canada, Mexico. We're talking about 25% here, right? Everyone's just trying to assess what that's going to do to the dollar index and for America as a whole, and for these other countries as well. So those are pretty big tariffs, very big threats coming from Trump there. But yeah, a bit of confusion here, especially regarding the tariffs, just general sentiment, and weak U.S. data. Most recently, declining consumer confidence and lower than expected durable goods. So, look again, no real direction here until obviously things become a little more clear with the Fed. When it's not sounding a little bit cryptic, and with Trump's tariffs, which is really what everyone's waiting for. That being said, let's take a look at the text here. So yeah, just looking, mixed technicals. RSI is below 50, but MACD shows a flattening trend. Look, if we move down excessively, if the DXY moves down excessively, we might get a rebound there. Key resistance levels 108.61. That's the 20-day moving average there, and I've got 109 as well. That's a round number as usual. We always talk about those. Look, if it fails to stay above like 108, next support could be a 107.44. Further break might be a 107.22 test. That's last week's low. But yeah, look, that's it for the dollar. Lots of uncertainty at the moment. The picture will get clearer as time goes on, and we get more information about tariffs and Trump's policies, and obviously a little more clarity from Powell. Okay, guys, let's take a look at gold for all the comms traders out there. Look, much like everything else in the market currently, it is a US dollar story, right? Obviously, Powell's comments did support gold a little bit, and also the tariffs that are going to be imposed on computer chips, pharmaceutical drugs, a whole lot of things have given the market a bit of fear in a possible trade war, or multiple possible trade wars that could occur. So gold will be supported as a bit of a safe haven. Another thing that could support gold is, the ECB meeting on Thursday. That could also give it a little bit of support. But again, unless things worsen in the Middle East and with Russia and Ukraine, the current story for gold is the dollar, or is America at the moment. But yeah, look, still looking somewhat strong, trading above 27.50, and it did fall on Monday following the equities sell-off in America there. It fell 1%, so that's something to look out for. But we'll get some text out of you, obviously. Some text out for you guys, considering the information that's just been given. Look, we're still, again, above 27.50. If we do break above 27.90, it could challenge the 2800 level. We haven't quite touched it, followed by 28.50, followed by 2900, if we do get some more bullish momentum on gold. On the downside, if the bears push price below 27.50, the next support is 27.42. That's a really, really simple 10-day moving average on my chart here. And then look, if that level is broken, we may have more support at 27.35. That's Tuesday's low. And 27.24.80, that is the 14-day moving average. But again, please trade with caution. The rest of the market is waiting for a little more clarity on policy and basically rates. So yeah, that's something to keep in mind. Alrighty, moving on. Okay, guys, let's look at the Australian dollar. So look, the inflationary numbers came out lower than expected. So inflationary pressures have eased off a little bit, signaling a bit of a rate cut there. A lot of bigger banks, bigger institutions, Westpac, Commonwealth, et cetera, have predicted numbers ranging from 2 to 6 rate cuts this year. That being said, added tariff pressures with the US and China have also contributed to this. Look, I'd be very cautious if you're in any Australian dollar longs. This has fallen for the third consecutive day. We've gone from last year looking at around a 68 to 69 cent target to now looking at 6,200, which we are approaching quite fast. Look, that being said, we'll take a look at the techs. So yeah, we did trade around 62.30. If we break below 6,200, big level there, it's going to indicate more downside. The RSI has dropped below 50, reinforcing the bearish outlook that we've got. But yeah, a decisive break of that 6,200. We might see some support at 61.31, the lowest. That would be the lowest it's been since 2020. We're talking about COVID levels here. So yeah, look, trade with caution. Immediate resistance, if you're looking for shorts, on this chart I've got 62.64. That's the 40-day moving average. And you could potentially target 6,300 if it breaks above that and obviously holds above that. That being said, though, I would trade this with caution and until more information and more clarity comes out regarding, first of all, America, Australia's inflation numbers, and obviously the Chinese economy as well, and tariffs with America and China. That's something to keep in mind. Anyways, hope all is well, and I wish you guys a phenomenal trading session, and we'll see you guys tomorrow.